This is The Bottom Line, a show designed to help Australian businesses succeed. On the show, you'll hear from leading Australian business owners as they share the lessons they've learned building their companies. You'll learn from their successes as well as some of the challenges they faced along the way. We also talk to experts from a range of fields who share specialised techniques you can use to improve your business. I'm your host, Savan Tuna, and I'm a director at Alexander Spencer, and I'm really passionate about helping Australian businesses succeed. Conversations about Bitcoin are no longer confined to headlines. They're entering boardrooms and client meetings. But what's driving this shift? And more importantly, what does it mean for business owners today? To unpack this, I'm joined by Carri Crawford, co-founder of Bitcoin Treasury Solutions, who is dedicated to helping business leaders understand Bitcoin. We'll explore Carri's personal journey into Bitcoin, the biggest questions business owners are asking, from regulation to risk, and why now is the right time to learn. Let's dive in. Carri, thank you so much for joining me on The Bottom Line.
Thank you for having me. It's absolutely a pleasure to be here.
Well, let's get straight into it. We're going to talk about all things Bitcoin. It's been 4 years and I've had so many people say to me, you got to do finance, you got to get people on there, how you make money. And the way to do it, I think, from my perspective is to get a Bitcoiner in and let's talk about Bitcoin. But before we do that, tell me a little bit about yourself and who you are.
I'm actually going to start with my upbringing. I was brought up by a gold bug.
Oh, no way.
Mother was fully down the rabbit hole of gold. Her passion in life was economics and geopolitics. And so I remember I was 5 years old when Nixon decoupled from the gold standard. And I remember at 5 there being talk around the dinner table around that. So I was brought up learning a lot about debt, US debt, the size of the debt, not so much about money printing. That's something that we'll get into perhaps later in the podcast, but I really understood this kind of spiral nature of debt, and it helped me to understand the value proposition of gold, and that's been really useful background when it comes to understanding Bitcoin. But from there, I, in fact, moved into stockbroking for 10 years. So I've got a financial markets background. I was on the fixed interest desk, followed by the private client desk at JB Weir & Son back in the day when it was still independent. And I was then put through, I was making monthly education seminars to retirees about various asset classes, basically an introduction to investments. And we were put through a presentation skills course, the entire private client desk was. And I found my calling, and the clouds parted and the angels sang and went, this is what you should be doing with your life. And I ended up going down that path and kind of chasing up with the guy who ran the training. And then I landed in that industry. And so for 30 years, I was a presentation skills trainer and coach. Still am. But what happened was during the COVID years, that got really bumped around. So I was doing it online and that worked. But then when we opened up again in Melbourne, you will have been through all of this with me, people would reschedule to make it live and then we would shut down again.
Yeah.
And so we went through all of this palaver. The stop-start, and I was getting old by then, and I'd restarted that business a few times for one reason or another, when I'd moved cities, when I'd stopped to have my son, etc. And so I just didn't have the energy in me by the end of that. And then we opened up, and everyone was managing the working from home and doing well-being training and all of this stuff, and I didn't have the heart. So I'd started to go down the track of, dare I say, crypto trading.
Wow. They brought the back in the old days at the trade desk.
Well, a little bit, but not really, because I'd never really been a trader per se.
Gotcha.
I'd been more of an investment advisor.
Yeah.
And then I realised the difference over time, the more I went down the rabbit hole and was exploring the crypto space, I really understood over time the difference between Bitcoin and the rest of crypto. So there's maybe 30,000 crypto projects plus millions of NFTs. And the penny dropped at some point along the line of just how fundamentally Bitcoin was different from the rest of the market. And then I fell madly and passionately in love with Bitcoin, as people do in this space. And so I just kept researching, and it's just an endless rabbit hole of different areas you can be studying and understanding when it comes to Bitcoin.
Carri, you mentioned crypto. There's 30,000 crypto projects, and then you got excited about Bitcoin, as we all do. Can you briefly, for our audience that maybe hasn't gone down either of those rabbit holes or understands blockchain, cryptocurrency, and Bitcoin, give us a brief summation of what that all means and what it is?
Absolutely. So I'm going to stick to Bitcoin here in the answer because I can't speak for the other 30,000 cryptos, except to say that very few of them share the same fundamentals as Bitcoin in terms of what they do and how they operate. So in terms of what is Bitcoin, I think it's really useful to start with the white paper, which was published in 2008 by a pseudonymous cypherpunk called Satoshi Nakamoto. And we don't know whether that's a he, she, or they. Might have been a group of people, we just don't know. And the white paper basically described the foundation for a peer-to-peer electronic cash system. And that had been worked on for years. People had tried to find the breakthrough in that space. Because when you and I transact, if I want to buy accounting services from you, so, I mean, if it's an Apple, I can pay cash. That's peer-to-peer, right? But if it's paying for your services online and I want to do that via ETF, EFT.
EFT, yeah. You're transferring me the money.
Then we need to trust a third party, being the bank, to take care of the ledger, to know that I've got the money in my bank, that it gets transferred to your bank account, and they keep track of that ledger of the money coming out of my bank account and going into your bank account.
Correct.
Yeah. And that's needed to happen up until Bitcoin, because there was no way of doing it peer-to-peer without the problem known as the double spend problem. And the double spend problem is whereby it's digital money. It can be copied and pasted. Everything digital can be copied and pasted. But there was no way of me being able to send that money to you and not be guaranteed that I don't try and then send the same money to somebody else as well.
Okay.
So the bank is keeping track of that and making sure that we don't double spend our dollars and try and pay for my goods and services with you and then the goods and someone else at the same time. And nobody had ever cracked the code for how do we do that electronically, peer-to-peer, without a third-party intervention. And that's what Satoshi Nakamoto cracked. And so what is Bitcoin? So he came up with this white paper with the fundamental idea of it, and he wrote the first 30,000 lines of code that embedded this set of rules. So it's a protocol like the internet. And I think what's really important to differentiate here is that there's capital B Bitcoin, which is the protocol, and the blockchain. And what we're going to get into in a moment is then there's lowercase b Bitcoin, which is the currency that comes out of that. So starting at the protocol level, what's happening is that it sets up a ledger just as the bank has a ledger, but it's electronic and it's not monitored by anyone except for this set of electronic rules, this code. And every transaction that takes place with Bitcoin is held in this blockchain. So every 10 minutes, a new block is created, and all the transactions from the last 10 minutes downloaded in effect and held on that block. And then the next 10 minutes worth, and then the next 10 minutes worth, and then the next 10 minutes worth. And so fundamentally, the blockchain is just an electronic ledger. And importantly, it's decentralized, which means that it's being managed and looked after, and the transactions are being validated by millions of miners across the globe, and potentially millions, we don't know, of what's called nodes, which is getting into a level of technicality that's probably irrelevant for most people's purposes, except to say that there's huge numbers of checks and balances. You've got huge numbers of people and computers double checking every transaction is valid, is not double spent, and is followed through, that if I've sent my money to you and you've sent your money to someone else, and that's happened over the course of 20 minutes, the first transaction goes on the first block and the second transaction goes on the second block, and the block can see, because it's chained and connected to one another, it can see the first transaction and therefore the coins that are relevant for the second transaction, and follows the chain of events of that transaction.
Wow.
So that's what's happening at the protocol level. Then what you've got going on is that to create each block, the miners compete all over the world every 10 minutes for the right to hash that block, to create that block. And the reason they compete, the reward for competing and winning the right to win that block, is Bitcoin, the currency. And that's the Bitcoin, the currency that we follow the price action on. So the miner gets that first, and then it's sold on the secondary market through exchanges, and you can buy Bitcoin from there. Or peer-to-peer, of course. We could do that to one another right now. Right. We could send each other Bitcoin. So that's the fundamentals of what Bitcoin is and what's ticking away in the background.
In terms of the problem it solves the intermediary risk, the need to have the bank, a need to have people in between the peer-to-peer to make the ledger work and have that. Does it also solve the cost of doing it? Because one of the things that when I've gone down the rabbit hole, we've got so many people, when we live in Australia, and there's so many first world countries that, that have access to banks, that have access to good governments. But, places like Africa and some parts of South America where people don't have bank accounts, they don't have access to money or access to their own. And this gives them, if you've got a phone, it gives them that right to be able to be their own bank. Take us through the journey of not only the fact that it solves, the peer-to-peer situation. What I love about it is it just gives banking and access to banking to the globe. What are your thoughts on that?
Well, very much in line with what you've just said. So one of the things that people fall in love with this project is its humanitarian aspect, because it does give access to banks for the unbanked, which is something like more than 1 billion people on the planet, like a huge chunk of it may be bigger than that, of the world population can't take part in the banking system. So the capacity to transact, and you're getting these local economies that are building up in South America and in Africa, where people are really trading and merchants are taking Bitcoin, and it's allowing a whole different level of interaction. There's another really practical issue here, which is that if I'm sending money to my family in Bangladesh, at the moment, not only is it massively expensive through the banking system, but there can be all sorts of things like you can have thugs at the door of the bank taking bribes, not allowing you in to access your money. So it's problematic at many, many levels. Whereas if I can send that money straight to my mum, like that, instantaneously, and she can go and spend it down at the local market and go and buy her goods and services without any third-party intervention.
Yeah.
So I think that's just an incredibly beautiful thing about Bitcoin.
Well, it was about a year ago, maybe a bit longer, the Lebanese government shut down the doors. The banks in Lebanon said, well, you might think you have money in the bank, but you don't, because we don't have your money in the bank. So a lot of people, we're lucky in Australia. We trust the system. We put our money in the bank thinking and knowing that it's going to be ours one day, but it's not yours. You're lending the money to the bank, and they're saying, yeah, you've got $10,000 in the bank and we'll give it to you one day, but they don't have to. They have to, but there's that intermediary risk. But we're so accustomed to it. It's like, I wouldn't call it brainwash, but it's like brainwash where people don't really know what is money. And can we dive into the fact around, the printers going off, inflation? Because one of the things that Bitcoin does is it's de-inflationary, or it's not it's an inflationary asset, but within control. So there's only 21 million Bitcoins that can ever be mined, and you can't just print it. And I just love that part of it, because in business, especially what I see at Alexander Spencer, post-COVID, the amount of government spending in terms of the handouts was ridiculous. And people say now we have a financial crisis, a cost of living crisis. The reason we have a cost of living crisis is the government's printed so much money by borrowing, creating bonds, putting it out into the market in the hands of businesses, handouts, government grants, during COVID, wage incentives. All those people then had abundance of money, and then they just put it out there. And now, you go to the shops and, a Cocoa Pops that I used to buy, which you probably shouldn't buy for your children to have, morning breakfast, but they used to cost $6 a packet. Now we're at $11. But pressure of business and business costs have gone up. It's hard for businesses to pay staff more wages because they're battling through their own cost increases. So then you've got this cost of living going up purely because of inflation, purely because they're printing more. And I think the thing that I love about Bitcoin is that it's a better version of gold. And I'd love to unpack that and talk about inflation, the limited supply, the analogy to gold and why it's better. What's your opinion on that side of things? Because as an accountant, I'm not saying I'm an economist, but that's the thing that really resonates with me a fair bit.
Look, I think that's ultimately where people end up, because once you're leaving aside the technical stuff of what is Bitcoin and what's going on in the background, the reason people really get involved in Bitcoin as an investment is for exactly the reason you've just said. So there's a really common saying in the Bitcoin space, which is came for the gains and stayed for the revolution. And so people come in thinking, oh, maybe it's a get-rich-quick scheme, or there's some way to just jump in and make a quick profit. And then the more you understand, you get into the humanitarian, you get into the environmental, which we can get to in the discussion later. But in terms of that inflationary piece, so I think there's some really important dates to bear in mind here. And most people will know this history broadly, but in 1945, Bretton Woods, after the Second World War, agreed to the US dollar as being the global reserve currency. And so what that meant was that everybody in the world needed US dollars to trade. Now, how do you get the US dollars to them? You do it by importing goods and services and, in effect, exporting dollars. So now the US has to maintain a trade deficit in the name of exporting dollars to the world so the rest of the world can trade. And every currency that's ever been a global reserve has ended up in the same dilemma, which is mammoth, overblown debt that just becomes bigger and bigger each year. And so how do you deal with that? The money printing comes into play. So that leads us to, let's go to, from Bretton Woods, we've already touched on 1971, the Nixon shock, where he decoupled. So what was happening was that it made sense for all the countries in the world to keep a lot of their gold in America, in Fort Knox. because it was secure, it was economically healthy, it was militarily strong. And so bonds were being held by overseas countries, Europe, Australia, Asia, but you could get your gold out if you needed to. So you could swap your bonds for gold.
Yeah.
France started to get nervous about their gold in Fort Knox and started to feel, this is in 1970, 1971, started to feel like maybe the US dollar was too inflated, maybe the debt was too high. And they started to send more and more of their bonds back and ask for more and more of their gold back. Yeah. And eventually it was creating basically a run on gold.
Ah, okay.
And so this is why Nixon said in 1971, he was fundamentally saying, we're not returning. France had sent a warship over to go and get the rest of its gold. And Nixon said it's no longer redeemable. That's the word I've been looking for. It's no longer redeemable.
The bonds.
The bonds are no longer redeemable for gold. So that's what started that 1971 decision. That was the reason behind it. And now what you've got is fiat, what you and I know as fiat, which is money that isn't backed by gold. So at least before, it was fixed to gold that had a stable price of $35 US an ounce. And now it was backed by nothing. So now you can go for it, untethered, unfettered money printing. Yeah. And so now you can spend whenever there's a crisis, you name it, evening out the cycle, and you spend money to stop us going into recession or depression. But those recessions used to clean out all the underbrush of business, zombie businesses. They used to go under. Now they don't go under. They're kept alive by this money printing. And as you've said, money printing creates inflation. Why does it create inflation? So why don't I pay you in sand?
Because I can't do anything with sand. I can't trade it. It's easily the wind can get to it. It can dissolve. It's not hard.
Absolutely. It's not hard. And there's so much of it, I can just go and grab more of it. So it becomes valueless. So for all of those reasons, and this was tried throughout history, we started with barter and then we moved on to choosing currencies, and sometimes that was shells and sometimes that was glass beads and sometimes that was, but each time it could be diluted because I can always go and get more shells or I can always go and make more glass beads.
Yeah.
And so it becomes valueless over time because if you're paying me in glass beads and I've got a glass bead factory or
in Portugal,
I can go down to, I know a beach with more shells, it's not worth anything to me. So it becomes valueless. So what we think of as inflation is not actually prices going up. It's the value of the purchasing power of your dollar coming down.
Correct.
That's what's actually, it looks like number go up, but number go up being the inflation, the price of your goods and services is going up because the value of your dollar is decreasing.
I tried to explain this to my daughter the other day around inflation and the power of money, and not the power of money, but that whole glass bead stuff. And we sort of tried to solve money problems like it was, 3,000 years ago. It was really cool. And I said, okay, well, how can we create money? And we talked about beads and stuff. And I said, okay, if you have 10 beads and there's, one bead being produced and da-da-da. And we kind of went through this. She uses these little beads to make stuff like jewelry. So we sort of did that and said, okay, we've got now 30 beads. You've got 30, I've got 30, da-da-da. And when you go to exchange those beads for, different things that you want to buy, and then I dropped all these beads on the floor kind of thing. And I said, is your 30 beads, how valuable is that? She goes, oh, it's not that valuable anymore. There's so many beads. And I said, well, that's what slowly is happening in the market with inflation. So, and we talked about her little piggy bank and rah, rah, rah. It was really interesting. It was really fun. But she got the picture when she realized, when something cannot be replicated easily, it's, it has sort of a limited supply, or it's difficult to make, or the value is in that. And I said, if we then we started going this rabbit hole. I said, if beads of grass was money, would it work? She goes, nah, you can just grow grass. Grass is everywhere. Well, it doesn't work.
Good for her.
And so we kind of, and this is a 9-year-old. So my older one, she's like rolls her eyes. But yeah, and it was really fun. And people don't realize that. So I think for me, they don't teach what is money, how money works, and the idea of money at schools. So, and Bitcoiners go, it's a bit of a brainwashing system and rah, rah, rah. I agree with that, but we don't teach it properly and we don't explain how it all works. So it's all there. If you do enough of the research, you understand it, that what we currently have is this money that's not backed by anything. And the government says, well, that's what it is. That's how medium of exchange, that's how we do it. And everyone just says, yeah, we'll rely on that without real substance or thinking that this system is broken. It doesn't make sense. And for me, I just go, well, doesn't make sense to me. And it's like, and that's how I kind of got into Bitcoin. It was more around, a bit like what you said. I had a bit of a mentor, someone that I knew, and got down the rabbit hole, and I got into acquiring it little by little. But then I was really intrigued by the problems that it solves and the rest. So yeah, it's interesting.
It really is. The way we do this, because we do Bitcoin education, and one of the things we do in the workshop, or one of the ways I describe exactly what you're saying. I love the way you've done that with your daughter. But why is the Mona Lisa valuable? Well, because there's only one of it. If there was 30 of them, would they become less valuable? What if there was 8 billion of them and everyone had one in their home? Suddenly it becomes less valuable again. And we actually do a little game where I get out some Monopoly money and we do an auction on a Monopoly house, right?
Yeah.
And everyone bids for the Monopoly house. So
That's
they've got
right.
like $100 and we start at 5 and eventually someone spends their entire $100 because they love the Monopoly house so much, right? But then I go around the room and I print money and I hand everybody an extra $500.
And we go to auction again.
And now it goes for $600 because they've still got the original 100, except for the person who spent it.
Yeah.
And so then we have the conversation going, was the house more valuable?
No.
It was no more valuable. People just had more money. The money became worth less. And I think that's a really interesting moment when people get that the same way that your daughter did.
When you get that, I think your life changes. And when you get that, you stop looking at the Bitcoin price.
Yes, I think that's right.
Do you look at the Bitcoin price as much as you
Very
used to?
rarely. In fact, one of your lovely ladies at reception asked me before about the price, and I'm like, I'd have to look that up.
Yeah, it's interesting. You don't, because you understand how hard it is. And when you're using the word hard, can you define that, hard money versus soft money? We've probably touched on a fair chunk of the differences.
I think it's about the finite proposition. We're talking about a finite number of Bitcoin that will ever be produced, 21 million, 19.5 million of which have already been created and are already in the universe, and the protocol doesn't allow it to go beyond that. And in terms of hardness, I think a lot of people compare it, say, to gold, because there's a couple of things about gold. It's physical, it's tangible, and that's why a lot of people like it. It's shiny, but it's also scarce. So when people went down that line of shells and beads, they ended up on gold because it was scarcer than any other commodity. So this is by the time they got to metals, because it was scarcer than any other metal. And it only comes out of the ground at the rate of 2% a year relative to the gold that's already outside of the ground and that's already being circulated. So that's considered hard money because it's got a very low inflation rate, being 2% in terms of what's being produced every year. As we've said, the government can go about money printing at 1,000,000 miles an hour. And you can't do that with Bitcoin or gold, but Bitcoin has the advantage over gold in terms of transferability, being divisible in such a way that I can pay for milk with it in a way that I can't with a gold coin. And one of the reasons that it's becoming enormously popular, not just at the individual level and not just at the business level as part of people's treasury assets, but at the nation state level. And this is a third date that needs to come into play. So we talked about Bretton Woods and we talked about 1971 Nixon shock. There are a couple of things that have gone on in the last couple of years that's made Bitcoin enormously popular. One is, third date to bear in mind, is February 2022, when the US dollar assets of Russia were frozen because of the Ukraine war. Yeah, so it was a way of trying to discourage the Ukraine war. The outcome is that a huge amount of trust was lost in the US dollar because it had just been weaponized. And for that reason, as well as the fact that a lot of governments around the world, like France did back in 1970, 1971, are understanding exactly what you and I have been discussing, this money printing, the oversized debt, the instability that comes over time with a fiat currency. And people are trying to, governments and countries are trying to trade outside of the US dollar. So the BRICS nation, Brazil, Russia, India, China, South Africa, et al., there's more of them now, are trying to trade outside of the US dollar. Their trade has dropped by 15% just in the last year in terms of usage of US dollars. People have stopped buying, like France did back in 1970, 1971. Countries have stopped buying US Treasury bonds because it feels unstable, like it's not backed by anything and it's being printed. And people are seeing that. So China, Japan, Europe, people have stopped buying US bonds to the degree that they did because they don't have the same faith or trust. And this is why people are moving towards what else can I get? There's gold, and they're all adding gold to their Treasury reserves. And now there's Bitcoin as well. And so slowly but surely, governments, businesses, hedge funds, asset managers, you name it, are discovering the value of scarcity.
And what I love about it is people just get gold and they get it. They get the limited supply. It's hard to get it out of the ground. You need to spend a lot of money, equipment. Yes, you can touch it, but it's a defensive asset against inflation and everyone gets it. I remember even, my background's European. Europeans love gold. The Indians love gold because it's scarce. If we just got all the people that love gold as a defensive asset and they just compared it to Bitcoin, they'll really understand how much better it is. What do you say to people that then would say, oh, but the internet can get turned off, or what happens if the US government bans it? Or I think the scary part is that they can't touch it or they can't see it. So how do you encourage someone that gets inflation, is a lover of gold, so your mum, bless her soul, I'm not sure if she's around anymore, but if she was here today and you had to convince her about Bitcoin and she's a lover of gold, I wouldn't think it would take much. And what do we need to do for those people that understand it, that need to know a little bit more? What are those misconceptions that people have that stops them being a gold lover to then go, hold on, Bitcoin's so much better?
It's a big question, and there are gold bugs out there who don't get Bitcoin, and you would think it would be a
simple
natural,
thing, right?
a simple thing.
That's right.
And my mother did think that because Bitcoin was around just before for a little while before she died, and she was sure it was a bubble and it was going to nothing. So she didn't get it. She wasn't going to make that transition, and I wasn't au fait enough with Bitcoin at that point
to
be able to move down that track with her. So some gold bugs will say, but gold has value at the industrial level.
You can make jewellery with it.
You can make jewellery with it.
It has a secondary purpose. Yep.
But actually, in terms of its premium and why it's going up in value at the moment,
is because
it's not because of the industrial purpose.
No.
In fact, everything about price action is about its store of value proposition. So that's number one. Internet going down, it would have to go down across the entire world.
Well, the banking system would be gone if the internet went down.
That was my point. It's like, well, if the internet's going down, we've got bigger problems than Bitcoin. Yeah.
Yeah.
And you're not going to be able to use gold either. You're not going to be able to get into your vault if you're keeping it in a vault, because that's all electronically run and everything's managed via the internet. So everything becomes useless, if the entire internet worldwide goes down. But when we're talking about millions of, this was the whole idea of decentralized internet, which was created by the US Defense Forces because decentralized couldn't easily be taken out. So it's the same concept that's behind the decentralization of Bitcoin.
And I think the other thing for me is I think all humans have the right to have money, make money, save money. And I've been seeing a lot, and look, we need to be conscious, and there's a question in this is, there are bad people out there that do bad things. And I feel like the governments and bankers and banks use that as a way to, they think everyone's a criminal. Like if you want to open a bank account in Australia now, oh my God, you need to literally you need to sign over your DNA in the way that they do it. The AML requirements around anti-money laundering and all of that. Yes, there are some bad people out there, but it's extending to the wider community. If I tried to send $100,000 to Bangladesh tomorrow, there is no chance I'd be able to do that. That'd be so difficult to do. They'd ask a million questions. Why are you doing it? Who's it going to? It'll get blocked. That should be a fundamental human right to be able to do that. And yes, there are bad people out there. You've got that. That's got to be figured out separately. I don't think you should stop that fundamental rights for being able to exchange goods and services for funds. And that's kind of what really annoys me around that. I think I had a client of mine came in and I think he wanted to take money out of the bank account. And they wouldn't, one, they didn't have the money. And the second, they said, well, you need to have given us fair warning. What are you doing with the money? What are you going to, are you building a house? So it's none of your business.
Absolutely.
It's not, and that's where I think as you go down the rabbit hole of what is Bitcoin and da-da-da, you start to question, why should the bank ask you what it is, where you go? It doesn't, the police should police. The governments should set the rules and the laws, but they shouldn't link it to general, privacy around what you do with your hard-earned savings. It's got nothing to do with them. And I think that's where I started going, hold on, because I'm in that accounting, banking world, you start seeing these things. And I know there's a lot of hacking going on and people stealing your stuff. And I just feel like there's a little bit of protection there, but I don't know. I'm just not liking where it's going. What are your thoughts on that?
I think you'll find a lot of Bitcoiners are bothered by government overreach and banking overreach.
Yeah.
And I went to get out, literally, it wasn't very much. It was maybe $1,000 or $2,000 to get out of the bank recently. And they were like, you have to make an appointment in advance to come and get that amount of money out and all the checks and balances. And of course, they always use the word safety. It's for your own safety. And by using the word safety, they create more and more rules and regulations and more overreach. And you'll find a lot of Bitcoiners talk about the same way that we separated religion from state back in the day. Really, what many Bitcoiners would love to see a separation of money from state.
Yeah.
And now there is the means to do that in a way that there never has been. So we'll wait and see if it ever takes off to that degree as a medium of exchange. At the moment, it's used far more as a store of value during uncertain times, and it's becoming less and less correlated. The price action of Bitcoin is becoming less and less correlated with the share markets, more correlated with gold action. So I think there is that shift towards people starting to see it less as that hugely volatile asset it was at the beginning, which I might add, so was Amazon.
Yeah, correct.
In its first 10 to 15 years.
Yeah.
But of course, as the market capitalization, so basically the denominator gets bigger, the drawdowns become smaller because it impacts the overall price less. One
of the other things that I see is I'll cheekily say to my staff, you got to go buy a Bitcoin and get into it and da-da. Oh, price is too high. I can't get one. It's too big. And I'm like, you don't need to get one. There's a million sats you can
Buy
get.
10 bucks
100 million
worth.
sats. There needs to be more education around Bitcoin. So let's dive into the Bitcoin Treasury Solutions, the Bitcoin education that you do. So you've set up with some other people a Bitcoin Treasury Solutions. Take us through that. What is that? What do you do in that space? And love for you to pitch the services you provide to the community.
Thank you for the opportunity. So what I find, what happens for a lot of people in Bitcoin space is there's a huge amount of Bitcoin education out there, but you've often got to piece it together yourself. So you get recommended books and podcasts, and you're almost inundated with the sheer volume of content that's out there. But very few people are taking you through in a logical way over 6 or 8 hours and going on the journey from how is it different from other investments? Yeah. What's the risk profile of other investments versus Bitcoin? What is Bitcoin? Where does it come from? What's the history? And then looking at, does it have a place in my portfolio? So what we're doing is taking people on that journey face to face so they can be asking their questions as they go.
Yeah.
Because if I'm just listening to a podcast, we're having conversation that goes all over the place, and it's fantastic. That's what conversation is, and it's human, and it humanizes this thing, and that's great. But it's not taking people on the journey from step number 1 to step number 2 to step number 3 in a more logical way. And so that's the niche we're trying to fill, because I come from a training background.
Yeah.
I've been training for 30 years. So I naturally want to think about, how do we do this incredibly logically? How do we consider the problem, the solution, the benefits, what it means for you personally? How do you implement it? What does that mean for you? And then I also tend to think in terms of, how can I bring it to life? How can we make it fun? What game can we do?
Yeah.
How do we gamify this in a meaningful way that makes it fun? So that's our business model. And so we're doing 1.25 hour brief introductions, and we're doing full day trainings that take people on a journey.
Amazing. Now, for those listeners that are listening, you're hosting one of your events in our office. So it'll be in the show notes. So if you are around in the Camberwell area, you'll need to come to the show. But we will put the event in the show notes. But I just wanted to say, in terms of business and the fact that the words Bitcoin Treasury Solutions leans towards from a business treasury perspective, have you seen and started to notice business owners starting to think about having their reserves or saving in Bitcoin or investing their reserve capital in Bitcoin, and maybe even taking medium of exchange and actually offering their customer base the ability to pay for their services in Bitcoin?
It's not a huge uptake in Australia at this stage, and some businesses simply don't have the cash flow and the spare reserves to be able to do that. But one of the exercises we do in the workshop is think about, well, what if I offset my 60-40 either personal or business investments, and, the kind of 60 shares and 40 fixed interest, and what if we made it 58 and 38 and allocated, or even 59 and, allocated 1 to 5%, what would those numbers look like over time? And in terms of people actually using it as a medium of exchange to pay for their services, again, it tends to be more people already in the Bitcoin world who are accepting. So if you want to pay for my presentation skills coaching or training with Bitcoin, you can do that.
Yeah.
Yeah. And certainly, of course, for our Bitcoin education. So it's not big in Australia at this stage, but we are getting the adoption overseas. But as you described earlier, that's happening more in developing countries first.
Yeah.
Yeah.
And where do you see the future? So it's a medium of exchange. It's slowly growing in adoption. And the reason we're having you here on the podcast, we've met over a series of conversations in the past, but the reason we're having this conversation is, as an accountant, I'm getting more and more inquiries, more and more questions, and people asking me what my thoughts are on Bitcoin. Do I trade it? Do I invest in it? Do I believe in it? And I could say 5 years ago, I was getting none of those questions. A lot of my younger clients were probably trading crypto as you probably did in your early stages, but the more sophisticated, educated business owners, they weren't there. They weren't the ones asking those questions. But now I'm starting to see more and more of that. Doctors, engineers, people that have had degrees, economists are asking those questions. And what I'm also seeing, which happened yesterday with a client, was a super, super conservative client. Land bank holder, as in land, land and buildings is the never probably bought a stock in his whole life. So he hasn't gone up the risk chain at all. And he's going, what is Bitcoin and what does that all mean? And I'm like, whoa, you've just jumped 5 hurdles in terms of, I don't think the risk profile is that high, but in terms of the standard, how we think through things, in the layman's terms, as what it is today, he is going 4 or 5 steps on the risk profile. And that's what's happening. And I think because of that activity, the slow adoption, it's still slow. And I always say to people, we're so early. It's so early in terms of where we're at. What are your thoughts on what the future holds? Do you have these visions of what that might look like? Not necessarily on price, but how Bitcoin will be used in our society or in communities?
There's a lot in what you've just said. What I would say as a starting point is it's really hard to trade. I wouldn't be trading Bitcoin or any crypto for that matter. It's a massive skill that takes years to perfect, and you can lose a lot of money along the journey. So it's an incredibly expensive learning process curve. So what I would say is, the old saying that financial advisors use that I don't know that I'm actually really a fan of as a saying, but it's time in the market, not whatever the other.
Yeah, it's the time horizon.
Not the timing of the market.
Timing of the market, that's right.
But I would say it's a minimum of a 10-year hold. That's what I say to everyone. Yeah. What do I hope for in the longer term? I think because of the scarcity proposition over the long term, I think there's a lot of predictions and a lot of ways of calculating where people imagine the price might go in the future, and because of that scarcity proposition, it's likely to go pretty high over time. More importantly, what I think we could see is if we had what's called a hyper-Bitcoinized world or a Bitcoin standard world where Bitcoin becomes the dominant currency instead of fiat or instead of gold. And under those circumstances, you've got a currency that can't be printed. And now house prices aren't going up through the roof. And you're back to what it was in
Before
the
Nixon.
gold standard days when inflation was actually extremely low and people could get into the housing market and they could educate their kids. And all this stuff is a function of money printing. And so the idea that, and also the other thing is, it's barely worth saving anymore because your money is going to be worth less next year and the year after that and the year after that. So your money in the bank or your money under the mattress is becoming devalued. And there's a chart that you would have seen of the decrease in purchasing power of the dollar over the last 100 years.
To zero.
And it's come down.
Nearly to zero.
Yeah, nearly to zero compared to what it was. And so it gives a real savings tool. And now it changes your whole value system because now it makes more sense to save than it does to spend. And that changes all the values of society. So much is downstream from the broken money system we currently live in. And I would argue a lot of the political arguments, a lot of the culture wars, I would suggest are all a function at core of this broken money system.
Yeah, and while World War I, and I'm not a historian, would have been done and dusted if Germany didn't keep printing money and building weapons. So if we're on the Bitcoin standard, it would have been a completely different world. And they say, fix the money, fix the world, and hopefully we do that. Carri, we could talk for hours. I'm going to have to get you on again because we didn't talk about the environment. We didn't talk about mining. We didn't talk about so many different other things in today's episode. But I'd like to get you on again. and maybe dive deeper into some other parts of Bitcoin that we didn't touch on today. But we have run out of time, and it's been a pleasure to have you here today. And I can't wait for you to use our beautiful space for the event that we're going to run in a few weeks. And for those listeners that want to come in, it will be on the show notes. But again, I want to say thank you for joining me on The Bottom Line.
Thank you so much for having me. It's been a delight.
This is The Bottom Line, a show designed to help Australian businesses succeed. This podcast was produced by accountancy firm Alexander Spencer. At Alexander Spencer, we've been helping business owners realise their goals since 1952, and we play a pivotal role in developing, implementing, and supervising the business goals and strategies of our clients. To find out how we can help your business succeed, head to our website, alexanderspencer.com.au. To make sure you don't miss an episode of The Bottom Line, be sure to subscribe to or follow the show in your podcast app. And while you're there, leave us a 5-star review. It really helps others find the show. I'm Savan Tuna, and we'll be back next episode with more tips to help you transform your business. And that's The Bottom Line.